Nikunj, who over the weekend chatted and caught up with the top-class panel of fund managers, beginning with Nilesh Shah of Kotak AMC, Tushar Pradhan of HSBC Asset Management, and Navneet Munot of SBI Mutual Fund on long-term investing. Here's an excerpt of that exclusive chat.
Now, when is the time that he thinks it is good enough to invest? Never. So even if he has a short period of success in the equity markets, it will only capture that gain. Many times, actually, it's the reverse, because the time that people invest in the equity markets is when everybody is talking about it. Like you mentioned, the people in the hotel along the way. Now, if they start to invest at a time when it is very, very expensive and just an experience after that, which brings the market very down, the price is available, there is something to transact, and in fear, a person might just say, let me just get out now. Whatever the loss is, let me take it, and that will be the end of it. The problem again is, when he comes out, he will go out of the market for a long time, because he never gets the courage again to do that, because the fear of the loss is very high in his mind. So for both these reasons, people tend to come in and out of the market and not realize the upside. While in real estate, you are not allowed to do that, because either you are in the asset or you don't have a price to transact.
On gold, I have very strong reservations, primarily because as Indians, we have imported more gold than what we could afford. We have sent more money in import of gold abroad than all the foreign direct investment received. We are a poor country. We need money to build our infrastructures, and we are building South African and Canadian and Swiss infrastructure. So because we have more gold than necessary, and because India cannot afford gold, my advice to investors will be that now let's stop. We have more than what we need. But if you don't have any gold, then you should probably, look that as an asset class. And today, fortunately, Government of India has given you option of gold bond, which can be used in place of gold. So from an individual point of view, take a different call. But if you can support country called India, then please abstain from gold. We can afford not to make money on gold. Our country can't afford gold.
Navneet, we say long term, which means that don't sell, stay in the game for 5 years, 10 years, 15 years, 20 years. The longer you go, the more money you make. But then markets always go through a cycle of bull and the bear market, whereas an SIP helps you to capitalize on it. But my basic question is, when does one book profits in stocks? If in 1st of Jan, if you would have booked profits, you would have made more money. If you're booking your gains now, you're not making that kind of a return. So what is the best time to start booking profits in equities when you've made 20-30% returns?
I think it's easier said than done. So let's say if you look at the last cycle, or let's say look at over a very, very long period, I give you a data point that over the last 35, 40 years, for which we have decent data for Indian equities, if you did one of these three things, you were very smart and you invested at the lowest point during the year, you were extremely unlucky and you invested at the highest point in a year, and you were like absolutely disciplined 1st January every year. Over this 35-year period, the difference between the worst and the best is hardly 0.5% or 1%. It does not really matter. Several times in a long-term bull market, maybe when Nifty started moving, it was 4,800 or so in 2013. 30% profit, meaning maybe at some level, 6,500, you would have sold your equity. Okay, I'll buy it a little later. But then we are at 10,000 today. Of course, we reached 11,000. So it's, with the hindsight, today somebody will say, I should have booked some profit at 11,000. But 11,000 was the peak only for the last so many years. It is not the peak for the next 10 or 20 years. Again, you will see another much higher level. I mean, it just reflects what is the nominal GDP growth, what is the corporate profit growth in India. It has not stopped in January when the Nifty peaked at 11,000. There'll be another peak few years later. So if your horizon is much longer, then some of these kind of, the tactical moves may not really add too much of value.
Nilesh, in 2013, I think we had a conversation on a different forum, and you said mid-caps look cheap. So tactically, you made a case on various public forums to buy into mid-caps. Similarly, you've been making case now in the beginning of the year that, you should revisit some other instruments. So as of now, where do you think for someone who's able to take a little bit of risk, wants to diversify a bit, minus equities, any other instrument one should go for?
So I will still come back to have a good asset allocation. build a portfolio for long term across debt, across equity. Within equity, you can choose large cap, mid cap, small cap, depending upon risk profile. Put some money in commodity, put some money in real estate. And combination of that should give you consistent return.